Argentina's economic landscape has been marked by various significant developments, including its efforts to manage debt obligations, its reliance on China for financial assistance, and the concerning decline in foreign reserves. These factors have contributed to a complex economic situation, with implications for the country's financial stability and long-term independence. In this video, we will explore Argentina's recent challenges, including the use of Chinese yuan for debt repayment, the doubling of the swap line with China, and the precarious state of its foreign reserves. Argentina has announced the doubling of its swap line with China. A swap line is a financial arrangement that allows countries to exchange their currencies and provides liquidity support in times of need. This move indicates Argentina's increasing reliance on China for financial assistance. By doubling the swap line, Argentina will have access to a larger amount of Chinese currency, the yuan, which can help stabilize its economy and address any potential liquidity challenges. The specific details of the increased swap line, such as the amount and terms, have not been provided in the given information. At the end of May, Economy Minister Sergio Massa and Central Bank President Miguel Pes traveled to China to double the available free money volume of the swap line between Argentina and China to $10 billion, approximately 8.8 billion euros in Chinese yuan. China allowed the Argentine government to access $5 billion, around 4.4 billion euros of the swap line, of which an estimated nearly $2 billion, approximately 1.76 billion euro, was used in April and early May. The total volume of the credit line amounts to nearly $19 billion, about 16.72 billion euros or 130 billion Chinese yuan. A special drawing right SDR is an international reserve asset created by the International Monetary Fund (IMF). It serves as a unit of account for IMF transactions and is used to supplement the official reserves of member countries. SDRs are not a currency themselves but represent a basket of major currencies such as the US dollar, euro, British pound, Japanese yen, and Chinese yuan with predetermined weights. On the other hand, a swap is a financial arrangement between two parties, usually countries or central banks, to exchange currencies at a predetermined exchange rate and then reverse the transaction at a future date. Swaps are commonly used to manage currency risks, provide liquidity support, or facilitate trade between countries. In the context of the given information, the swap line between Argentina and China refers to an agreement where the two countries can exchange their currencies Argentine peso and Chinese yuan up to a certain amount. In summary, SDRs are international reserve assets created by the IMF, while a swap is a bilateral agreement between two parties to exchange currencies. Argentina is facing a dangerous decline in its foreign reserves, bringing them to the lowest level in the past 7 years. According to the Central Bank of Argentina, the internationally held reserves denominated in US dollars decreased from $44.6 billion in May to $36.5 billion, from 39.26 billion euros to 32.12 billion euros. The situation is further exacerbated by the continuous devaluation of the Argentine peso and a high inflation rate of over 100% compared to the previous year. In April, the South American country also announced its decision to use Chinese yuan instead of US dollars for Chinese imports in order to preserve its reserves. Overall, Argentina is reinforcing its dependence on China by accepting Chinese yuan to repay its debts to the IMF and by increasing the utilization of the swap line. This step allows Argentina to preserve its reserves denominated in US dollars and fulfill its financial obligations. The Argentine currency has been the worst performing currency among emerging markets this year. The central bank's dollar reserves are at their lowest level since 2016, and if we exclude the swap line, gold, and multilateral financing, the liquid cash reserves are even in the negative territory. However, this heightened dependence also carries risks, as Argentina becomes increasingly reliant on China's economic support. The dangerous decline in foreign reserves and the ongoing devaluation of the Argentine peso highlight the country's precarious economic situation, compounded by high inflation rates and extremely high interest rates. The decision to use Chinese yuan instead of US dollars for imports reflects a desperate attempt to stabilize reserves. However, it also amplifies Argentina's reliance on China and raises questions about the country's long-term financial independence.